When you get a loan from the bank, you get all of this money, but do you ever wonder what happens behind the scenes? I'm Katie, the real estate gal in Denver Metro, Colorado, and I am sitting here with Joe McCoy, who is a commercial local lender, and we're gonna get an insider's perspective of what goes on behind the scenes for determining if you get a loan or not.
So Katie, when you're brand new to buying a rental property, or even if you're a seasoned investor, it starts with having a sound business plan. It can be very simple. Maybe you want to set out to buy one small rental property over the next few years and build up a portfolio. But you want to have this objective. You want to have this plan that you can be able to explain to them, buying one at a time or one every few years. So Katie, second, you've applied the strategy to the opportunity that you have, and you can show how you believe the numbers involved will make the deal work.
So when you say numbers, there's formulas involved. How do you know what formulas to use, and can you paint a picture of what that looks like?
Sure. So the formula that you can tell if a property will be a good investment is you're calculating the net operating income. And it's really simple. You simply take what the gross rents from the property are on a monthly or annual basis, and you deduct what your operating expenses are, your expenses to manage and own the property, and the result is your net operating income. In determining the eligibility of a property to qualify for a loan, or to determine the specific loan amount, a lender will look at the NOI and divide it by the monthly loan payment to come up with the coverage to see if it's sufficient to pay for the property.
Is the NOI the only formula that you use to determine a loan?
Another formula that lenders utilize is called the debt service coverage ratio, or DSCR. And to determine your debt service coverage ratio, you simply take the net cash flow, net operating income from the property, and divide it by what your loan payment is, and the resulting percentage is your debt service coverage ratio. And typically lenders like to see 1.25 coverage or better. The third thing that's important, Katie, is to have all your loan package items together and ready to submit. Go meet with your lender and talk to them and find out what it is that they want you to submit to them and how they want that formatted.
So it kind of sounds like the lender will be there every step of the way that can provide these formulas and help you run the calculations. Is that right?
Right.
Okay.
Right. Yeah, the lender can show you how to calculate the NOI and how they do their debt service coverage ratio, and give you an idea what the loan payment's going to be, and maybe if there's other things in there too, if they escrow for taxes and insurance and so on.
So how do I know what information a lender is going to need?
For a loan application package or checklist, ask for that first, and you want to go through it and collect all your documents, all the stuff that they're asking for, make sure it's complete and accurate, and probably the most important piece of that is your personal financial statement, and that needs to be very complete and very accurate. It's very important.
So why is all of that information so important?
So, people think, well, if the property can cash flow adequately and the down payment's sufficient, and my credit's good, what's the big deal? I mean, why do I have to do all this other stuff? And what you have to understand, Katie, about lending, and especially bank lending on investment properties, is, bank lenders don't make loans to properties.
Yeah.
They make a loan to the borrowers, and the bank is making you a loan based on your ability to generate income and repay the loan. The property provides collateral for the loan and should be able to service its debt on its own. It should be able to generate enough income to pay for itself as well. But at the end of the day, it all centers around the individual borrower and their total financial picture. So, a borrower may own other properties, other businesses, and if those other business interests are affected negatively, that could affect their ability to qualify for their loan, even though maybe the property they found is great and everything works good with the numbers on the property itself.
So if someone's ready to get started, can they reach out to you?
Absolutely, Katie. That's what I'm here for. That's what I do on a daily basis. I've done it for years and years. Even if you're not sure yet what you want to do, or if you're months away but you want to start understanding the process, I'm glad to help with that. And along with you, if you've already been doing this for years, you got an investment portfolio, but you want to gain a little bit better understanding, or maybe work on some things strategically, glad to help.
If there's anything that either one of us can assist with, please reach out to us. Call, text, email, we'd be more than happy to help. I'm Katie, the real estate gal. I'm in the Denver metro area, and Joe McCoy is a local commercial lender. Thanks so much for watching, and we'll see you next time.
You should, I was thinking like you should title these videos like Beauty and the Beast or something, you know?
We could do
Yeah, I gotta smile.
And so, should we
Yeah,
hold
I
it
know,
back?
I know. I need a high chair.
Maybe give me a low chair. Okay. So if someone's ready to get started, can they reach out to you?
Absolutely.
You went on, you said more things after. Okay.
Do I look too serious? Or am I okay?
Okay.
Okay.
So that's straight.
I can't get any
Why are
straighter.
you
I can't get any taller, giraffe girl. I'm like,
All right. Can you scoot over like just an inch? Okay, thanks.
good. I should just take up the whole picture, you know.
Sure. Okay.
Perfect.
Better. Hot damn.